Hello, in this short video, I thought we'd take a look at some of the key headlines from the recent budget. So this is March 2023. Now, the headlines not specifically relate to property. However, when we look at the detail, there are a few aspects that can impact us as property investors, property managers, and business owners. So let's take a look at some of the key aspects that might be of interest to you. If you have properties where you have tenants in place and they are paying the bills, then you'd be pleased to hear that the energy price guarantee has been extended for a further 3 months. This will help cap the tenants' bills and help them maintain financial viability so that they can continue to pay the rent. Now, if you're a HMO investor, this is also good news because obviously with a HMO, you'll be paying energy prices. And I'm sure that you've seen a spike in energy costs, particularly during the cold winter. So again, this 3-month additional energy price guarantee is going to be helpful in order to contain energy costs. In relation to that, there's also a part of the budget that talks about the cost of prepayment meters. So this is where people have gas and electricity meters in their home and have to pay for their energy up front. What has been announced in the budget is that the cost of energy for these prepayment meters will be brought more into line with direct debit. So at the moment, if you pay by direct debit, you can access lower cost gas and electricity. So this is hopefully to bring some parity with those people on prepayment meters and those people paying by direct debit. Other business related items in the budget that might be of interest to you is something called capital allowances. Now, what this allows is that if you buy certain piece of capital equipment, now it does talk about plant and heavy equipment, but for many businesses, this should also really extend to computers and printers, for example. What this means is that you can write off a capital allowance of up to £1 million a year. This means the cost is offset against the revenue in that year and therefore is essentially a tax deductible expense. Now, usually when you buy capital equipment, that goes directly onto your balance sheet and you don't get the immediate benefit of that allowance. Currently, as we speak, there is an enhanced allowance in place of 130%. So what that means is you get a bonus for investing in capital in your business. From April, that will go back to 100%, which is still good for businesses and will really help you when you are purchasing capital equipment for the year ahead. If you are running your own business, it is a really good idea to have either a personal pension or a work pension in place. Contributions to your pension, again, are an allowable expense against tax. So this is a really good way to save for your retirement and for your future long-term planning. Currently, you can put £40,000 a year into your pension tax-free. That's going to be raised to £60,000. At the moment, there's also a cap on the amount that you can put in your pension over your lifetime. This is known as the lifetime allowance and is currently £1 million. In this budget, the government have proposed getting rid of this cap, so you would be able to put as much as you want into your pension without incurring that higher rate of tax. The idea at the moment is to encourage senior doctors in the NHS to stay in work rather than retire. Many people in this situation are finding that they are taxed more heavily on their pension, and therefore it is not economically viable for them to stay in work. We will see if this does actually go ahead, as if you've seen the news, this has caused a lot of consternation amongst many groups. So we'll see whether that actually does get through into the finance bill. Now, maybe not immediately obvious as relating to the property industry, there are now 5 construction occupations that have been added to the shortage occupation list. So this is a list of occupations occupations that people across the UK, people and businesses across the UK really struggle to recruit for. Obviously, since Brexit, we no longer have the freedom of movement from people from Europe coming to work in the UK. As a property investor and property manager myself, I've definitely seen a shift in demographics of the types of tenants coming to rent our properties, from those coming from Europe looking for work to those coming from further away countries such as Nigeria, Thailand, India, Philippines, coming primarily to work in healthcare and engineering, certainly in the area where I'm based. However, the construction industry has indicated that they have got a skill shortage and would like to recruit more people. So by adding these occupations to the list, it effectively relaxes some of the visa restrictions of workers coming to the country. Now, together with the investment areas that the government has announced and 20 new levelling up partnerships across the country where the government is investing in local areas, that would help drive new jobs in that area. So this is all really good from a property perspective. This gives you an idea. If you're looking for a new investment area, do take a look at these areas. That inward investment will attract more people to the area, will attract more skilled workers to the area for a prolonged period of time. So if you're looking at rented property, this is a whole new tenant pool that will be really good tenants for your properties in that area. Also, through the infrastructure investment in these areas, it will uplift the values of all properties within that area. So it'd be a really good idea to take a look at these areas, invest now, and then hopefully the capital value of your properties should increase as that infrastructure investment bears fruit in future years. Another aspect relating to business is the announcement the corporation tax will be increased to 25% from April. Now, apparently this will only apply to profits over a certain level, so it won't impact most small businesses. The range of corporation tax will still start at 19%, where it currently is, and increase to 25% depending on your revenue. So most small businesses will not be impacted by this. However, if you're unsure, it is worth talking to your accountant. The budget talks about refocusing on house building. As we all know, there has been a chronic housing shortage in the UK for decades, really. There are lots of issues around this. This budget talks about 300,000 new homes a year. This is up from previous targets of around 200 to 250,000 new homes a year. There is a lot in the budget here around pollution on sites that are looking to be developed and the delays that causes. So they are looking into how these areas can be improved to allow for building works. Now, as I said, there is a lot more in the budget than what I've covered here. However, I've just tried to pick out those areas or those elements which could impact us as property investors and property managers. So I hope that's been a useful summary, a whistle-stop tour of the March 2023 budget.